Hello and welcome to this week's episode of Coinscrum Markets. I'm Nisa. Coming up, Matthieu Jobbe-Duval returns to review the markets in crypto RFQ. Tally Capital and Bloq co-founder Matt Roszak speaks to Teana about his journey from Bitcoin's earliest days. LAB577 and BCB Group talk to us about their collaboration on the BLINC network, enabling instant fiat payments for the crypto ecosystem in Europe. And Philip Gradwell's back to analyze this week's on-chain data in on-chain reaction. First, a look at this week's blockchain industry news. Bitcoin's recent rally has probably ensured that the majority of its investors are now back in the black, according to blockchain data analytics firm Glassnode. The company estimates that 95% of Bitcoin holders are now in profit based on an analysis of the unspent transactions across the network, despite the price still being 40% off its 2017 all-time highs. They noted that in a tweet that extended periods at this level and above are characteristic of bull runs. The current strength was also supported by a noted fall in Bitcoin deposits being held at exchanges, along with the largest weekly inflows of the rapidly growing USDC stablecoin. Congratulations to our sponsor, BlockFi, on the closing of their $50 million Series C investment round, which impressively includes two prestigious U.S. university endowments. The sun may be shining on many crypto asset holders right now, but the rain came down hard on a large number of Chinese Bitcoin miners earlier this week. Bitcoin's network hash rate plummeted by as much as 25% over a 3-day period when, according to reports, miners based in Southeast China were forced offline due to flooding caused by a particularly heavy downpour. The Federal Reserve continues its show of intent to explore a digital dollar, announcing a partnership with MIT on a multi-year effort focused on central bank-issued digital currencies. The announcement included a reference to previous tests conducted last year using the Hyperledger Fabric framework. Even with trading volumes on decentralized exchanges recently exceeding those of their centralized counterparts for the first time, a note of caution was expressed by one trader in an article published by Cointelegraph this week. Dan Matthieu, co-founder of trading firm CMS, said that he didn't think that these trading facilities were yet ready for professional traders due to lack of price transparency within the liquidity pools, and citing their reliance on centralized order books and arbitrageurs for price discovery. And finally, with election season looming in the US and postal voting coming under scrutiny, in some quarters at least, it seems that the US Postal Service was already ahead of the game, having filed for a patent for a blockchain-based voting system in February this year. The application stated that its system separates voter identification and votes to ensure vote anonymity and stores votes on a distributed ledger in a blockchain. Only time will tell if either of these candidates gained enough votes to perform a 51% attack on November 3rd. Don't forget to click and subscribe to our channel for more updates. Next up, Crypto RFQ.
Thanks, Nisa. Matthieu Jobbe-Duval is back with us again today for another Crypto RFQ. Matthieu, CoinList, tell us, what is going on in the markets this week?
So clearly, everybody's very excited with the 12,000 number on Bitcoin.
Yeah.
A lot of going around, the stock to flow graph showing that the next red dot is going to be extremely exciting. It's great. Crypto is very correlated to the price of Bitcoin, whether we like it or not. Whatever you're building, if Bitcoin sinks, then we are all in trouble. So it's really great for the industry.
Yeah. Well, and there's been some interesting movement in the futures market this week too. So talk to us a little bit about the futures curve. What's happening?
Absolutely. So the futures curve has held a very strong contango since the last few months, since March, after the quick move in backwardation, we moved back into a raging contango, and it has stayed there for quite a while perpetual swap funding rates have been pretty close to flat. So it's very interesting to look at why futures would stay so heavily contangoed, meaning that some people bought those futures, right, and brought them to a premium to spot price, while the perpetual swap seems to be, no funding, meaning there is no real positioning going on those instruments, at least no imbalance of positioning.
Mm-hmm.
So one thing that's very interesting to notice is that really perpetual swaps and futures are used for completely different use cases. Perpetual swaps, what you will realize is that when there is a run-up in the Bitcoin price, such as the one that we saw a week ago, perpetual swap funding rates tend to blow up. Why is that? Well, it's because the perpetual swap is the most liquid instrument out there, also the most cash-efficient instrument out there to put on a position very quickly.
Mm-hmm.
Why does that matter? It's really because when the price of Bitcoin runs up, there is FOMO developing, and investors, traders, whales buy Bitcoin, right? They buy Bitcoin from OTC desks.
Yep.
These OTC desks hedge these trades by buying Bitcoin, but not cash Bitcoin, because that's extremely cash inefficient. They hedge perpetual swap Bitcoin, which use a lot less margin, of course. When they do that, by pressuring the price of the perpetual swap higher, they push the funding rates higher, meaning that the longs have to pay the shorts, and so you get penalized for being long Bitcoin. However, futures, as I said, do not really have that dynamic. Why is that? Well, actually, if you look at futures, they trade about 5 to 10 times less than the perpetual swap. So they're really not the instrument of choice when it comes to hedging order flow. However, they are a great instrument in that they guarantee you a price for Bitcoin in the future when the perpetual swap doesn't allow you to do that.
Right.
For example, if you were to go long perp, short futures, you have no idea how much the perp is going to charge you or pay you in funding rate. We can go into details if you're interested, but basically the futures are completely used to hedge miner flow, and that is USD borrowing flow, while the perpetual swap is used to hedge OTC flow.
So, it's a different market for different people with different investment strategies. So that there's not necessarily the overlap that we might assume. I think that's what you're trying to say.
Not necessarily an arbitrage between both. You could say, well, futures are trading at a solid contango, so I could go long the perp, short the future, and cash in the difference. That works as long as there is no big run-up in Bitcoin price. Mm-hmm. Not because the trade has basis, the trade has zero delta, just because then the perp would cost you a lot of money to carry the long position. So it's still safer to play it via spot. The futures really are used by lending desks who are taking miners' Bitcoin, selling that Bitcoin spot to generate the cash that they then lend on to miners, and then go long the futures out in the curve to hedge the delta position that just generated. That pushes up the contango. Now, how can the market make money of that? Well, it's great. You just can buy spot, right? If you have USD, you can buy spot and sell futures, and voila, you just made money. So that's why USD is in such high demand right now. It's 10, 12, 15% APR, because it's so profitable to have USD, because buy Bitcoin with it, sell the future, sit on the position, and profit.
Fascinating. So Bitcoin finally did make some moves. We were talking about that a couple of weeks ago. It had been pretty flat. But there was a knock-on effect on the alt space and the DeFi market. So, give us a quick overview of how the Bitcoin price going up has impacted the DeFi space and altcoin space.
Yeah, absolutely. So the ratio ETH to BTC has been extremely strong. And, you see all the ETH maximalists, the flippening is finally coming. Really is the tree that hides the forest. ETH has had an okay performance versus Bitcoin. It has also relatively underperformed in the last 12 months. But what's going on in ETH is what's under the hood, the RC20s.
Right.
There is a lot of activity in DeFi currently with these projects spinning up new tokens that are being paid as incentives, really airdropped for free to use these protocols, and kind of generating insane valuations with, stories that are hard to believe, such as tokens that trade $50 one day, zero the next. Clearly, be very careful and invest only what you can lose, and do your own research. But DeFi is clearly very, very exciting at the moment. A lot of people want to invest in the space, want to believe in the space. From my perspective, I think one of the most promising projects, actually that realized already a decent amount of performance, is Curve, which is essentially paying you to pool assets in those 5 or 6 liquidity pools. Now you're ending up with a stablecoin pool that is $700 million big. That means that any trader can come in today and hedge 100 million USDC for 100 million USDT, that is, swap the one for the other and pay 10 basis points. That is mind-blowing. If you try to do the same trade on Kraken, that would cost you maybe 1%. Yeah. So say whatever you want about DeFi and about, I sometimes make fun of it and say, well, these projects are, it's so hot air. Actually, something really useful got built, and traders can profit from that and access a quasi-infinite pool of stable coins that they can trade in and out of.
Yeah. Matt, it's always a pleasure to have you on. Thank you so much for joining us today.
Thanks, Teana.
I'll talk to you next time. Back to you, Nisa.
With VC investment into crypto and blockchain projects running into the billions over the past few years, Matthieu Roszak was one of the earliest to see the opportunities that Bitcoin was about to inspire. Matthieu joined Teana this week to recount his memories from those early days, as well as talk about what's keeping him busy and inspiring him today.
Thanks, Nisa. I'm delighted today to be joined by Matt Roszak, co-founder and chairman of Bloq. Hey, Matt, thanks so much for joining us today.
Hey, Teana. Thanks for having me.
Yeah, it's a pleasure. So, many people would consider you a Bitcoin OG, Matt, and you've worn and wear now many hats. So for our viewers, can you tell us a little bit about yourself, your background, and how you ended up in Bitcoin and blockchain?
Well, I've always loved technology. I did some coding when I was a kid and got into the early internet. So in the late 90s, started investing in building internet companies. Some worked out, some didn't. Wound up co-founding 4 enterprise software companies, ran a venture fund. So I was very active at this intersection of tech and finance. Did a stint at a private equity firm early in my career. So I was always fascinated by this intersection of financing, technology, venture, et cetera. And then in the kind of the .com craze, learned about investing, but moreover learned about people. And once you invest in people and you're kind of invested, how to build a compass, how to read people, how to work with people. And that was, I think, the biggest benefit in investing in lots of startups in a concentrated period of time. And so fast forward to about 2010, 2011, I was chairman of a social gaming company in Singapore. Bought a company there about 10, 15 years ago. And it wound up having to deal with payment processing as a core competency. And somebody mentioned Bitcoin. And this is now 2010, 2011. And in Singapore, flying back to Chicago, it was like crickets. Nobody heard about Bitcoin. I talked to a lot of the top quartile VCs that invested in some of my companies. They're like, no, that's crazy. What are you talking about? It was like, I was like, either there's something not here or there's something really here. Because when you kind of get that reaction, it's kind of binary in a way. So we invested in Kraken and Coinbase and BTC China and a lot of the kind of early exchanges, wallets, payment processors, a lot of the bridges, roads, and tunnels. And that really kind of got me to invest in a lot of other, Ethereum and Ethereum killers out there, whether it was Block One or EOS and others. Not that I was looking to say, oh, what's the biggest, baddest one? It was more so I want to learn, and all these investments, whether it's an exchange or payment processor or the decentralized network, it was more over like these were like building this heat map of the space to really understand what's happening, not happening, and the white spaces that were kind of forming in between.
In 2010, you could lock yourself away for a weekend and learn about Bitcoin. And people ask me now, how long will it take for me to amass the knowledge that I need in this space? And I'm like, well, you need to be really curious and really passionate and really interested, because there's a lot to learn. And so now for someone to kind of get their arms around this space, you know, it's becoming specialized, right? Where, you know, the information is just expounding and multiplying at such a rapid rate. And I think, you know, we were privileged to get in early so that, you know, we're not necessarily like a frog jumping into a boiling pot today, right?
Totally. I couldn't agree with you more. And it's like, I don't think there's any, I'm still a student, you're still a student in this, the ground, and it's one of the exciting things of this space is that the ground shifts underneath your feet, sometimes in an anxious way, but mostly in an exciting way, where you see these innovations, you see the bridges, roads, and tunnels being brought up or built up, and then you see new people coming into the space, whether it's Paul Tudor Jones or MicroStrategy, which just bought, you know, $250 million worth of Bitcoin, and you see all these imprints, and it gets new people in the space to say, maybe I should pay attention, because I mean we're humans, and the way we kind of like we have these kind of headline things that we see, and this is outside the crypto bubble, and they see hacks, they see fraud, they see it was originally drug money, it was all these nefarious type headlines that are, you know, human nature kicks in, instincts kick in, and it's off-putting, so I'm gonna not do that. And then when you see signals like Paul Tudor Jones and Microsoft and Goldman and Fidelity and all these data points, you're like, okay, so it's mature. And if you look back at any technology in the earliest days, it always had some weirdness. But in order for, you know, and again, you look at railroads and telephony and internet and now blockchain-based networks and systems, if you said, oh, it's going to cost $10 billion or $20 billion to burnish this new network, this new railroad, et cetera, nobody would actually sign up and pay for that. You got to have a lot of innovation, missteps, crazy ideas. Out of those crazy ideas, one idea gets taken out and embedded into another new idea. And so that innovation cycle is the innovation cycle, and it usually costs more than what you would do to kind of spreadsheet out a pragmatic approach. And so it's kind of more the art than the science of building new networks.
Yeah, so true. So speaking of new builds, you co-founded Bloq, maybe not so new now, and what feels like a bit of a bygone era, when the strong narrative was around DLT enterprise use cases and blockchain tech. And you know, one of your co-founders, Jeff, was a longtime Bitcoin developer too. So tell us a little bit more about Bloq, and what were your core objectives when you started the company, and how have things changed for you over the past few years as the goalposts continue to move?
So we've always been focused on public blockchain infrastructure. So in the early days of Bloq, we got attracted by a lot of household name, public, regulated banks, financial institutions to help them build a compass, build a plan around blockchain and crypto. But the subset we dealt with were the ones that wanted to deal with public, tokenized networks, public blockchain. So, I mean, we were always like, if you want to, track cabbage on a blockchain, call IBM, they'll do a great job for you. If you want to engage in tokenized networks, that's what we do. So we built Fidelity's first Bitcoin wallet. We had a lot of cool imprints in building out that infrastructure. At the end of the day, we're plumbers, we're builders, we're kind of sitting behind the scenes of a lot of projects and platforms. Today, Bloq is building a lot of the core infrastructure to underpin blockchain. So that's nodes, data, staking services, and a whole other portfolio of things that will be coming out later this year, next year. And ultimately, all these services that you need to build and engage in these networks, there's like two sides of the equation here. There's the exchanges. So take a Binance that, I need to buy assets, trade assets, manage liquidity risk, all that stuff. There's another side in terms of the usage of these networks. Like, let's just take a web server, and I need storage, compute, database, access, etc. That, what Amazon Web Services provides in one composite service, in the decentralized network, that's like, 5 or 8 different layers. And so when you think about like, okay, I want that, but I have to then now compose that and bring all these disparate pieces together, it's a lot of time, effort, friction, and doesn't really play well into human nature. Just give me a service, etc. And so the way you think about it is all these services, whether it's storage, compute, etc., they're vending machines that require a token for the service. Mm. And so you abstracting that and saying we have an engine that will help you find storage based on time, security, and cost, based on these parameters, and we'll just deliver that to you. And so we're creating this program that harmonizes that experience, because right now it's really difficult to get all that individually. And so that's what Bloq is building towards. So you could maybe look at it as, if you squint your eyes, this is what Amazon Web Services will look like in 10 or 20 years. It's that level thing. Amazon did well for the early internet and cloud, but going forward, it's about managing these vending machines that require a token for a service that are all distributed. And so, we're not going to be building huge, warehouses full of servers. It's going to be done on a distributed basis.
So going back to that, entry level, not the souped up 5.0, entry level enterprise, are we still dealing in walled gardens, or are we actually moving toward, permissionless hybrids where, blockchain is really going to add some critical value as opposed to, souped up databases for large banks to manage their information?
I think it's still early in that curve for them. I think, they're more predisposed to just buy some Bitcoin on their treasury than to dive into a tokenized network, because it's just easier and more discreet to say, oh yeah, we're into crypto. But for them to light up a new tokenized affinity token for their customers, when they buy more, they get more, kind of a thing, tracking and tracing a lot of that with these incentives. That doesn't seem like a heavy lift, but it's so external. There's marketing, there's compliance, all these other things that is more complicated to do and orchestrate. And so I think, people tokenizing their mileage points and being able to trade those mileage points as basic as an example that is. But I think a lot of these, if these mileage points, these affinity points are thought of carefully, they could be really amazing currencies for those ecosystems, much like what Binance has done. It's using it in the 1.0 is like trade more, get more. You could pay less fees for this. And then you have special things that unlock if you're a holder, like to get into an IEO, to try new products, etc. And so that they've used that to an advantage. A lot of other exchanges have followed suit, because now if I'm an exchange without a token, I'm at a massive disadvantage from the marketing and interplay and stickiness of a network.
So jumping back to something you said earlier, your years as a private equity investor, managing billion-dollar funds. So your early investment thesis when you first got into Bitcoin, how was that thesis influenced by the combination of the traditional finance background that you had previously and the discovery down the rabbit hole? Tell me about that convergence.
Well, actually, the private equity experience was it like had antibodies to fund innovation. It was like pragmatic, good brand, defensive market position, all those things. And so I was with Advent International in London when I jumped ship to the internet world, and they missed the whole internet because they were pragmatic, they were disciplined, and they didn't invest outside their lane. And getting in the early internet, learning how to work with entrepreneurs, how to back entrepreneurs, how to spot entrepreneurs, some pattern recognition there always helped. And so my gravitational pull in the early days of crypto was always hang out with the developers. And so I went to a lot of conferences, sponsored a bunch of dinners, and it's what I like to do. It's like, I'm a foodie. And so dealing with food and conversations around crypto, which was a hack for me to learn. Mm-hmm. And that's how I got to learn about, what tech is coming up, what's hard, what's easy, and kind of distinguishing, what a CoinDesk or a Cointelegraph or a Decrypt article can't really tell you. You got to ask somebody. Yeah. And so that was really helpful, and they got to meet some of the best technologists in the space. That's how I met Jeff at one of my dinners, how I met CZ at one of my first dinners. So that was invaluable, just to be, again, going back to your earlier comment, we're all students in this, and the professors are the entrepreneurs, the technologists, and you got to hang out with them to kind of see around the proverbial corner here.
So where are we today? How far along are we on that path from, I don't know, crypto maturity and adoption, on a linear time frame? Where are we at?
I mean, when I first got into Bitcoin and crypto, I thought by 2020, we'd all be, paying for stuff with Bitcoin, and this would be more of a,
you really did.
It would be more of a thing. It would be, there'd be greater usage, greater adoption, etc. Everything in the early internet, a lot of the pitch decks, a lot of the ideas actually were spot on. It just took an extra 10 years to get there. Yeah. In this case, I think, if I look back at what we're doing here, it's a lot different. It's not like you and I are trading photos on Instagram. This is money. And so the adoption of money, the trust factors around money, the compliance, the custody, the confidence, all that stuff, it takes a lot longer to bake that cake.
For sure.
And so it's still in the oven and it's still baking, and you kind of chicken on it. It's like, hey, it's baking really well. And so I think seeing signals over the last year, I can't be more bullish about certainly Bitcoin and the rest of the ecosystem. I'm more bullish now than I've ever been, and I've always been kind of on the front end of adopting and building and investing in this space. But it's kind of satisfying to see big name investors, public companies engaging in this, but not just a flyer, really thoughtful engagement, writing a thesis or a paper or a statement on why. And then when you read why MicroStrategy or why Paul Tudor Jones engaged in Bitcoin, you're like, wow, they get it. They really get it.
Mm-hmm. Matt, it's been such a pleasure to have you. Thank you so much for joining us.
Thank you for having me. Thanks, Teana.
Back to you, Nisa.
With the stratospheric growth of stablecoins triggering a wave of interest from commercial and central banks to experiment with blockchain and distributed ledger tech, we can safely say that product market fit has been found. And with the crypto industry driving their adoption and development, the question surrounding whether public or private blockchains would offer the best infrastructure for wider adoption and scaling has remained open. But what if each camp can benefit from the other? BLINC, an instant fiat payments network built using the Corda Enterprise DLT platform, was recently developed and released as a collaboration between two UK-based firms. Teana spoke to LAB577 to find out more.
Thanks, Nisa. I'm delighted today to be joined by Oliver van Landsberg-Sadie, founder and CEO of BCB Group. Hi, Oliver.
Hey, Teana. How you doing?
Great, thank you. And Fuz Prejikpour, director at LAB577. Hey, Fuz.
Hi, Teana.
Hi.
Hi, everybody. Hi.
Well, welcome so much to both of you. Today, we're here to talk about your recent collaboration that's culminated in the launch of the BLINC network, and that has been designed to facilitate instant settlement for both fiat currencies and digital assets. So pretty exciting stuff. So many of our viewers may already know, and it might not be that they understand the vernacular around it, but one of the biggest challenges that we face in crypto trader space over the years has been treasury management across the many trading venues that are out there, especially the fiat leg of that. So Oliver, can you start us off and tell us what exactly BLINC is and why you've brought it to market? Which customers is it servicing? Which trading venues, liquidity providers are you working with, etc.?
I think your hook on treasury management there is a good one. It certainly helps large organizations in the crypto space to move money where it needs to be much quicker than they could do through traditional payment rails. That kind of superpower is also super useful for arbitraging gaps in the market. So where there are trading inefficiencies at venues which have different liquidity positions and therefore have slightly disconnected prices, a trader can quickly switch between these venues by moving money fast over BLINC. This is just not possible if you're trying to do it over SEPA or SWIFT or any of the traditional networks. We've seen a great precedent in the US for USD services. So what BLINC is here to do is to fill a gap in the European market and eventually the Asian market as well, to cover GBP, Euro, Swiss francs, eventually USD too, either whether independently or via partnership is TBC. But it's really to solve those problems. The kind of clients we're looking at are exchanges who are the hubs of industry, market makers who move the biggest sums across those hubs. And then I guess one layer down, it's the traders, the funds, the retail services, the commercial services, all of those, other pillars of this industry who need that fiat support, not just for trading, but also, to pay their staff. So by providing the payment rails in traditional fiat currencies, and then this BLINC layer on top of those, which carries other digital assets as well, we're really starting to see our impact in the market in how it's making things a little more efficient and how it's reducing friction. And cost.
Yeah. So many of our viewers will know that there's been a long-running standoff between the public blockchain purists on one side and the various proponents of private or enterprise solutions utilizing the technology in a more kind of federated fashion on the other side. Fuzz, you and your co-founders at LAB577 previously worked together, as you mentioned, with R3, Corda, banking consortia, etc. And you were pretty influential in the design when you were working at RBS. So you've now developed BLINC in partnership with BCB to help solve the public blockchain problem. Can you tell us a little more about the technology itself that underpins Dazzle, and what is the out-of-the-box, Corda element? What is proprietary to you?
Sure. So Dazzle is first and foremost, the way you would experience it is through an API, pretty straightforward, simple API. It's designed to be agnostic. So when you look at the API, you don't suddenly go into the depths of Corda. You don't necessarily go into the minutiae of Corda, and it kind of gives you that separation that makes it easier to integrate with. And then it has a layer which sits directly above Corda. That layer can be plugged with others, but that's what it's using under the hood. Corda is really great in terms of its atomicity, its finality, its resiliency. There's a lot of things that we really like about it from an enterprise perspective. And we use Corda plus a couple of other libraries that are available. So some of the libraries that we're talking about, Accounts SDK, Token SDK, those are ones that kind of have been developed with some of the work that we've done as well. So early work that we did with Corda, developing tokens on Corda, that sort of has fed and influenced, I think, some of this work that's happening in Token SDK. So it uses those constructs, but it adds on top of that some level of descriptors for assets and definition of assets in a way which are really flexible and easy to manage rather than having to code everything inside Kotlin, inside Corda. So it gives us kind of like really nice layer that allows us to quickly define new asset types. And it also has a really rock solid settlement engine. behind it that utilizes our state machine, which is quite proprietary, I suppose, for Basil, and allows for really secure, consistent tracking of asset transfers, of settlement requests, and so on. So, in summary, agnostic at the very top, the firmaments under the hood are definitely all Corda, and then in the middle we have a set of technologies that make it easier to use and is to make it more secure in terms of the tracking of transactions. That's it in a nutshell.
So Oliver, BCB is regulated in both Switzerland and the UK. And, naturally there are regulatory obligations, risk assessments that go with, remaining compliant, and also working to safeguard customers' funds with the relationships that you have with, major banks. So I just kind of wanted to talk through a couple of those risk factors and find out a little bit more about how you've dealt with them. So first, I guess, what's the reaction from regulators been when you've introduced these new technologies or these new ways to kind of manage treasury?
That's a great question. And I think, getting the UK license was probably a lot more difficult than the Swiss license. I guess the combination of the UK being a little, the FINMA versus FCA, they're very different organizations, and they've differently progressed against different measures. But I think having a license as an authorized payments institution in this country and being 100% dedicated to the crypto industry is still a first, and it's still an only thing. And I think what we really had to demonstrate was that the risks that underpin the crypto industry are in essence, a lot more manageable than the risks that we see in the fiat industry. Mm-hmm. It's a lot easier to trace movement of money on a blockchain than it is to trace a suitcase full of dollar bills. So it takes a lot of myth busting, a lot of collaborative research as well. FCA are not doing this in a vacuum. We're not applying for this progression of regulation in a vacuum. It's a dialogue, and one that we hope will, open up the pathways for more organizations to participate in a clearly risk-managed way.
And lastly, so why did you choose to, understanding all of those risks and the obligations, why did you choose LAB577 and Corda versus other solutions?
I think if we look at the menu of choices, the menu is growing. I mean, there's, Ethereum, for a start, is probably the most well-known programmable ledger. And we can broaden the scope and look at other fantastic protocols like Ripple and Stellar, even Hyperledger, which is a kind of a meta protocol. And then we look at Corda. Each of them have their own strengths and weaknesses. I think one of the most important considerations is the boundary between anonymity and privacy. Mm-hmm. So what we want is a private network. What we don't want is an anonymous network. Mm-hmm. What we do want is a network that understands the financial institutions that are trying to engage in this space, and that is not geared towards these extremely meta tech projects, which are blockchains of blockchains of blockchains. Yeah. And what we arrive at as the most credible solution, in my view, is Corda. And out of Corda sprang Fuzz's work on and his company's work on the Dazzle layer above that. But what's cool about Dazzle, and why I don't even need to lose sleep on which ledger to choose, is that it is agnostic to the underlying blockchain. So if for whatever reason Corda doesn't work out, blockchains come and go, who knows? You can it can speak to other networks, and it really needs that adaptability to evolve and survive over what is an extremely fast-paced evolution in this industry.
So, Fuzz, working on these legacy payment, clearing, and settlement systems in your previous career, where are you starting to see the most traction in traditional markets? And what's the sales process like, or the inception process, that kind of advocating when you're trying to crack into these larger and less agile organizations?
Yeah, so definitely we are seeing traction by some significant market participants, some of which are public already. So they've been announced, if you like, and they're doing some sincere and the hard work really to get there. And others who are just examining the potential, and they're talking to firms like ours to see what's possible. So we are working really hard with all of those individuals, all those parties there. We've got a few engagements already. So in the past, when I worked on payment systems, I know of a few, and one of them, for example, was done between a major national first-tier bank and a sovereign entity. I'm not going to go into the specifics, but the bit that was interesting there is that the communication pipeline between the two parties was encrypted. It was mutual TLS. It had cryptographic signatures on either side on a payload basis. It was using messaging technologies like AMQP. So if you, and I've spoken to that team as well, and I said, well, if you just simply squint your eyes and blur a little bit, that's exactly what Corda does. That's exactly how it's working. There's no magic to blockchains. It's been overhyped maybe in some aspects, but if you really look at the internals, that's actually how we build mission-critical systems. So that's actually helped level the concerns, if you like, to a point where we're kind of saying, okay, so it's the JVM, fine, it's using TLS and using SHA-256, and we're using these particular elliptic curves for signatures and so on and so forth. And then you kind of go, well, actually, we all know this stuff. Yeah. It's not that difficult, really. That helps sort of open the possibilities. And now what some institutions that we've been working with are looking at are saying, well, okay, we don't want to do interbank transfers, but we're geographically located all around the world. We have entities in the US, in the Netherlands, in the UK, and can we have an internet work for ourselves, just so that we can settle our books at the end of the day without having the complexities of international payments and so on involved there.
So it feels like this BLINC project is well conceived, solving a problem that exists today. It's a great partnership between two companies that see eye to eye and working well together. I'll ask this question to both of you. What other critical problems do you guys have your eyes on and think that similar types of collaborations could solve?
I think I'll have a quick go at this one, Fuzz. I'm going to put a kind of, I guess, a regulatory lens on, because it's helpful to think of markets through a regulatory lens, because that's what's ultimately going to shape what really takes hold in the next few years. So if we consider the kind of market efficiency role of regulators, I think that's something that we're beginning to address here with wider channels. If we look at consumer protection, that's also something that a network like this addresses. I think the third and biggest opportunity ahead is the representation of equities and other real-world assets on the blockchain, because that's, I think, where Dazzle will truly shine.
We're doing quite a lot of work in that space at the moment. Yeah, so we're really excited about what's coming for the end of this year and the beginning of next year. Yeah.
Brilliant. Well, we'll have you back to tell us more about what you're working on when you can talk about it in a little bit more detail.
Thank you.
Gentlemen, thank you both so much for joining me. Fuzz, Oliver, it was great to have you. And wish you both the very best with BLINC, BCB, and with LAB577.
Thanks, Teana. Next up, Philip Gradwell is back for this week's On-Chain Reaction.
Welcome to On-Chain Reaction. I'm Philip Gradwell, the Chief Economist at Chainalysis, here to take you through what's been happening on the blockchain over the last few weeks. Well, it's an exciting time to be in cryptocurrency. Bitcoin has now spent multiple weeks with its price above $10,000. It's only the third time in Bitcoin's history that the price has been above 10K for multiple weeks. And due to those high prices, there's been a very large amount of Bitcoin flowing into exchanges to be sold. This is because people want to take advantage of this high demand and these high prices to lock in some gains. Now, in the last week, there has been a slight decrease in Bitcoin inflows to exchanges compared to the previous weeks, which suggests that some of the selling pressure is starting to ease. But where did this sell pressure come from? Well, we can look at the data on the blockchain, and we can look at the Bitcoin that has made a large US dollar gain since it was last received. And we can see how much of that Bitcoin that has made more than 25% or more in US dollar terms since it was last received, and see how much of that has been sent. In the week of the 3rd of August, there was a very large amount of Bitcoin sent that had made these high gains as people rushed in to lock in those profits. It was around 350,000 Bitcoin moved that week that had these gains. That's a level that we have only ever seen before in the 2017 bull market and in mid-2019. In the last week, the week of the 10th of August, there was still a lot of Bitcoin that had made these high gains that was moving, but it had stepped back quite a bit since the 3rd of August. This suggests that longer term holders, they took some profits in the earlier weeks, and maybe now they're sitting back and hoping for some higher prices before they decide to move even more Bitcoin that's made these high gains. It's a similar story for Ethereum. We've seen reduced profit taking last week after very high amounts of the week of 3rd of August, and that it's easing the sell pressure somewhat. These are still historically very high levels of inflows into exchanges and large movements of Ethereum and Bitcoin on chain, but it's certainly eased from what we were seeing a couple of weeks ago, suggesting that crypto prices have survived that initial sell-off and the demand is potentially still there to keep us going for some more weeks in the future. And a lot of this buying has really been supported by Tether. So Tether, the stable coin, often used to buy Bitcoin or Ethereum, it's seen all-time high inflows. In fact, on the 10th of August, $806 million worth of Tether, that's 9% of the supply of Tether on Bitcoin and Ethereum, flowed into exchanges. So that's a huge amount of liquidity to pour into exchanges to buy Bitcoin, Ethereum, other cryptocurrencies. But despite these record Tether inflows, it's not just Tether that's driving the market. We can look at the ratio of Tether to Bitcoin inflows to exchanges. Over the last 365 days, there's been enough Tether flowing into exchanges to buy 48% of all the Bitcoin that's flowed into exchanges over the same time period. It's currently around 53%, so above that annual average, but not that much above the annual average. That suggests that actually there's a lot of fiat pouring into crypto to buy that Bitcoin. So overall, cryptocurrency, it may be making a rare evolution into a larger, higher price market. We really need to wait and see whether these high prices can be sustained to see if we are in this new phase. But higher prices do appear to have survived the initial rush to take profits. But inflows to exchanges are still high. There is still a lot of selling pressure, but not as much as we've seen previously. And it looks like fiat purchases on exchanges are actually really important. And this is even despite the record Tether inflows to exchanges. So my big question is, do we end up in a positive or a negative feedback loop? Does the narrative of higher prices, potentially even activity in DeFi, encourage more people to enter cryptocurrency and therefore soak up this supply as people take profits? Or do we end up with an excess of supply, too much cryptocurrency being sent to exchanges, which takes the price down and therefore takes some of the power out of the current dynamic of the market, which might mean we don't sustain these long-term higher prices? It's going to be interesting to watch and see what happens. Thanks for joining me.
Thanks, Philip. You've been watching Coinscrum Markets. Thanks so much for joining us. See you again next week.